Welcome to CFD trading. Contracts for difference, or CFDs, are a flexible alternative to other forms of trading. CFDs allow you to trade on whether you think the price of a financial market will go up or down. CFDs can be used to trade a wide range of markets, including shares, currencies, stock indices, commodities, and more. What is a CFD? A CFD is an agreement to exchange the difference in value between the price of a contract when it is opened and the price when it is closed. This means CFD trading, depending on your position, allows you to profit if the value of a share or any market moves down as well as up. And as you are only trading on a price derived from the underlying market value, this means you never actually own the share or asset, which can make it cost effective. For example, there's no stamp duty to pay. How does it work? Each share or asset has a buy and a sell price, known as the bid and the offer, which is derived from the underlying market. If you think the market will rise in value, you buy at the offer price, called going long. If you think the price will fall, you sell at the bid price, called going short. The more the market moves in the direction you've predicted, the more profit you make. The more the market moves in the opposite direction, the more you could lose. It's up to you how long you keep the trade open. What markets can I trade on? CFD trading isn't just limited to shares. You can trade on a huge range of financial markets from all around the world. Forex, commodities, stock indices, exchange-traded funds, and many more. Do I need a deposit? CFDs are leveraged products, meaning you only have to deposit a small initial percentage of your overall exposure to a market. For example, let's say you want to trade 10,000 shares in a big company. With traditional share trading, you'd have to buy 10,000 shares at the full price. With a CFD, you only have to put up a small initial payment, as low as 5% of the total value. It's important to remember the risks of leverage. As your deposit is only a small part of your overall exposure, you can lose substantially more than your deposit if the trade goes against you. However, it is possible to reduce your potential losses by using a stop order. This means that a trade will automatically be closed if it goes against you by an amount that you specify. What are the costs? To open or close a CFD trade, you may have to pay a small commission, which can be as low as 0.1% for shares. Other markets, such as indices and foreign exchange, are commission-free. You may also have to calculate interest adjustments that are added or subtracted from your trade if you hold the trade overnight, and consider any dividend adjustments. However, as you don't actually own the shares or assets you're trading, there's currently no stamp duty to pay in the UK. An example trade. The price of big company shares is currently 149p, 150p. You think the price will rise and want to trade 10,000 shares, so you buy at 150 for £15,000 total exposure, paying a 5% deposit of £750, which is the initial margin requirement. You pay 0.1% commission to open the trade. 10,000 shares times 150p a share times 0.1% gives us a commission of £15. It's near the end of the day and big company shares have risen to 180, 181p, and you decide to take your profit. You sell 10,000 shares at the sell price, 180, and pay a commission, on this example, of £18. So your profit is calculated as follows. The opening level of the trade was 150. The trade was closed at 180, giving us a difference of 30p. 30p times 10,000 CFDs bought is a profit of £3,000. Cost of £33 was the commission, so our overall profit on the trade after costs is £2,967. CFD trading is a flexible alternative to traditional trading with access to a full range of financial markets and allows you to make money when markets are rising or falling. You don't have to put up the full cost of your exposure to the market, and there's no fixed time period to your trade. This video was brought to you by IG Markets, the UK's #1 CFD provider. Remember that CFDs are a leverage product and can result in losses that could exceed your initial deposit. Trading CFDs may not be suitable for everybody, so please ensure that you fully understand the risks involved. Investment Trends UK Financial Spread Betting and Contracts for Difference Report, November 2010.